So I hope all of you have a very good Chinese New Year. And recently market has been slightly flat lah, as you all know. Mainly because nothing much going on lah. So I mean in terms of technical perspective and the fund flow, right? It seems rather flat. You can see that most recent fund flow data for SGX is very lackluster lah. It's slightly above zero only. So we do expect to see this black market probably for the rest of February. So for most of you, including myself, we will probably have a few position that is sort of stuck lah, and that is perfectly normal. So you don't need to panic so much. So when the market is stuck, right, try not to exit your position or try not to go and prematurely take your loss and then go and chase something else. Mainly because, right, every day, there's bound to be something that is running up. Even if you look at Friday, right? Singapore markets is mostly red, but you do have Oceanus that is running up quite high on that day lah. So no matter how bad or how flat the market is, there will always be something running, and it is okay that if you are not in those trades, you don't have to be in every single trade that is running for that day lah. So don't ever try to feel FOMO on a flat day, go and exit your counter and then go and chase another counter, because if that becomes a habit, right, what you will run into is situation where you are going to incur a lot of small losses. You will never get a very big win and end up you are going to rack up a lot of commission charges because you keep exiting too early and go and chase another counter. So what I always tell my course trainee is that when you exit a position to chase another position, you are basically giving up your trade plan and go and chase another counter lah. So in order for this to work, right, the main reason why you do that is you are predicting a few things. Number one, you are predicting that the current counter that you are holding is not going to go up, is going to get stuck. So you are predicting one thing. So that one prediction is already considered bad. But when you chase another counter, right, you are predicting the second thing. The second thing is that whatever you chase, it will run up. So in that situation alone, right, you need two of your prediction to be true in order for you to benefit from that action. But most of the time, right, what you end up is whenever you chase another counter, then that counter also gets stuck and you are back to square one lah. So there's no change to your situation except that you have realized your loss, you didn't follow your trade plan and you have racked up additional commission charges lah. So try to be discipline in your trading plan during market when market is flat lah. So when market is flat, right, I don't trade so much. I just leave my position there, and I usually go and do other things lah. If you really want to trade, right, in order to sort of curb your this thirst for trading, right, what I personally do is I have a forex trading account, which inside, right, only $2,000. So I will place like one very small micro lot in that forex account just to sort of cure my hand itchiness lah. And sometimes if I'm lucky, I will win like $50-$60 on that forex trade. If I'm not lucky, then I will lose like maybe $20-$30. So I mean, although it's not a lot of money, it is something to keep yourself occupied if you really do want to trade during when market is flat lah. Because normally when stock market is flat, right, there will definitely be some action going on in the forex side lah. So you can sort of play around a bit with very small account just to sort of make sure that you don't do funny things with your stock portfolio lah. Okay, so there isn't. So let me just show you my trades. So I'm sure all of you are familiar with this already. So these are all the trade setup that I posted on Patreon. So all the trade setup are here. The most recent one is of course the Palantir, which I posted today on the 20th Feb. So you can see that those at the front, some of them start to take profit, but some of them still stuck until now. And of course, there is one loss. So if I look at my pie charts, right, what you can see is that for the total trade, right, there is close to 60% open trades lah, and about 16 trades that have been closed with a profit and one trade that has been closed with a loss. So this is all the trades that you see here. Then of course at the bottom, there is the Nimbus trade outcome, meaning these are trades that I personally take, which means as long as you see a tick here, meaning I take that trade personally. So you can see that on my personal trade, currently I have about 10 open positions. So I do have a lot of open positions, some of them in the green, some of them in the red, but it doesn't really matter because as long as I am not hitting my stop loss, I am sticking to that trade. And of course, I have one loss, which is that same loss as the trade, which is this one, the MMG. And of course, I also have about 10 trades that were close with profit lah. And on the right side, right, you have the trade segregation by total market. So recently there were a lot of comments saying that they want more US counter. Hence, you see there is a sudden surge in the US counter lah. Now it takes up about 46.5% of my trades coming from US counter. But this sudden surge in US counter is also mainly because during the week before Chinese New Year, Singapore and Hong Kong market were quite flat, whereas US has been quite active lah. Hence, you can see that pre-Chinese New Year period, right, there were a lot of US counter coming in lah. So but of course you can see for my personal trade, right? I do favor Singapore trades a lot compared to US and Hong Kong. So you will see that slight divergence here lah. But overall, right, what you will see is both my trade outcome and the total trade outcome, right? They will be sort of equal percentage lah in a way. But what you can see here now is that I don't really take a lot of trade, mainly because I do have a lot of open trades and my capital has been somewhat used up already. So I stopped entering trades. I just let the whole although I stopped entering trade personally, right? I do post trades. I do continue to post trades because maybe most of you might still have capital to go in. So you can see that at the bottom here, right? I don't really have much trades that I personally entered lah. The one that I entered very recently is of course this Swire Pacific A, AEM, and PayPal lah. So these are the three trades that I entered in around February like that. And of course, we have recently taken profit on the Oceanus trade lah. So beside the trades, right, you will see a link. So this link will be only posted when the trade is closed, either profit or loss, and then I will post the link. So these links are actually private links, meaning public does not have access to these trades. Meaning if you go into my trading view account, right? If anyone from the public goes into my trading view account, they will not be able to see all this trading view lah. So on those open trade, right, they will not be able to see the trade setup, the profit level, stop loss level. Because I mean, to be fair, it is only for those who are paying for my Patreon, they will access to that link. But once the trade is closed, right, I feel that it is okay to reveal the trade since it is closed already, so that the rest will have access to it. And of course, to be honest, it is also marketing strategy on my part to sort of show my authenticity lah, to show that I do put up all these trade before price start moving lah. Okay, so that's basically my current situation right now lah. I have 10 open trades and I have no longer have any free capital to enter additional trades. So my position will be as like this until I start taking loss or I start taking profits lah. Okay, so as we mentioned just now, the fund flow has been relatively flat. So this is the weekly fund flow. What you are interested is in the blue line. So what we want to see is, of course, we want the blue line to be above the 0. So we want the blue line to be on the positive side. And you can see that from sometime from last year, October onwards, we can see the institutional, the blue line is sort of keeping towards the positive side, which is somewhat a good news. And it is about that time you start to see our Straits Time Index, our SDI start to recover a bit lah. So currently for SDI, right, I am still on the bullish bias. I will not be bearish bias until I see the blue institutional line goes back below zero most of the time lah. So if you look at the cumulative, right, you can see that the institutional line, it is sort of turning back up. Just that for the past few weeks, it has been slightly flat lah, which is you can see here also it is slightly flat. But I do believe that as long as it is flat, right? Maybe after 1 or 2 weeks, it will continue to go up, and you will see SDI start to recover also, because you can also see that the support is somewhere around here lah. So until this support is broken, right? Until this level is broken, I don't see the need to panic at all. But once this 2008 is broken down, right? Then we might be back into a bearish market mode lah. But as long as 2008 is holding well, right? I don't see the need to panic lah. So let's take a look at some of the usual SDI index and the US index lah. So the SDI index, as you see here already, right? We can see that during the early part of 2021, we do have a good bullish moment here. After that, things got a bit flat, and when come to close to Chinese New Year, price start to go back down already. So this is pretty common, where prior to Chinese New Year, price retrace a bit, mainly because many traders, including the smart money and the institutional, right, they don't really want to hold on to big risky short-term positions, so they tend to cash out. And hence you will see this decline in price. And of course, in the Hong Kong market also, we did see sort of like a flat market before the Chinese New Year. But if you look at on the US side, right, the US side still somewhat okay. We can see that bullishness in the early 2021 during January, and that was the period where we managed to take a lot of profit from a lot of the US counter. Somewhere here we have the Vexa, BlackBerry, Workhorse, somewhere here also the Shake Shack. So we did able to take majority of our US position for profit lah. And this is the S&P 500. So if you look at the Dow Jones, right? Similarly, we are in that very strong uptrend. But of course, in the past few weeks, in the last 2 weeks, right, you can also see that US market is generally flat also. It is quite flat also. It's not really going upwards. So because the market is flat, right, you will see that most of your US position are flat also. So we are not in a case where price is sharply going down. So if all your US position are very red and you cannot handle that open red position, right, it does mean that you probably have traded more than you should. For example, S&P is this is S&P, right? So S&P is down about 1.9% from the top lah. So S&P is down 1.9%. But if your entire US position, right, you are holding a loss that is over like 10-20% of your portfolio, right? Then it is most likely that you have entered too much of your position, more than what you can risk. So it is very important to find out when you are stuck in certain counters and you are seeing a lot of red, right? Is it truly because the trade is bad, or is it because you entered too much position? Because as long as the trade is not hitting the stop loss, right, the trade is still valid. So as long as the trade is still valid, right, you should be comfortable with your position. If you are not comfortable, it's most likely that you have over traded. So my advice is always that if you don't feel comfortable holding rate, right, try to reduce your position. Try to stick to 1% risk per position. Meaning, if you have a $10,000 account, if the trade hit your stop loss, right, you should be only losing $100. That is 1%. Of course, if you look at it, right, losing $100, and if you look at most of the stop loss in my trade, right, it does seem that you cannot trade a lot of shares. You cannot trade you cannot trade big position. That is nothing to do with the trade strategy or the stock itself, but rather I would say that $10,000 is not really a recommended amount of money that you should be trading with. So usually the solution to most of your most situation that trader gets into, right, is can be solved with either by lowering your position or by increasing your account size. Okay, so with all that said, right, let's look at some of the counters that we have taken, and we have sort of open position, and we have uh for the past few weeks that all these new position. And you can also see for Hong Kong, right, it's doing quite well compared to both US and SDI. So if you notice, right, the Hong Kong tech the Hong Kong tech ETF, right, it has been doing very well. I think the last time we entered this, we took profit at, I think, somewhere around here, but it still continue to go up lah. So for those who did not fully taken your profit, right, you are probably still in a lot of money right now. Okay, so let's look at some of the counters that we sort of shows up in the previous week. So I'm going to show you my scanner. So this scanner, the result of this scanner came out, I think not long ago, like probably 3 hours ago only. I just posted it. So let's look at the Singapore counter, right? So I will come here, go to Singapore. Where's Singapore? So Singapore, definitely we have Oceanus. So for those who are not aware, the Oceanus trade came in around here. And then after this came in, right, you realize that price went sideways for a while. Price went sideways. So I personally managed to enter around 0.58 like that, somewhere around here. Then I think the stop loss was somewhere here. So it did went sideways for a while, but the thing is, if you held through this sideways movement, right, you will probably able to TP on Friday, which is 0.075. But the thing is, even if you did not TP on Friday, right, you can see that this candle is very bullish. The momentum is quite bullish also. It is most likely that it can continue to go up, probably to the second TP. So the question is whether Monday, is it going to go up straight like that, or is it going to retrace a bit and then go up, or is it going to sideways and then go up? So this one, right, we do not know. We cannot predict. We cannot predict which one will happen. But what you can do on your part is you can hold your position, and of course stick to your stop loss. And if it does continue to go up, right, you will be able to take that additional right. So what happened personally for me is I have taken about 80% of my position as profit here. The other 20% I'm still holding. So if it continue to go up, I will be able to write the remaining with 20%. Okay, so we have Oceanus here, and of course we have the Samco Timber also. Samco Timber, this one, the chart itself is quite all right. So if you want to trade this, right, you can trade this, but personally for me, I don't really like this kind of chart, mainly because we have not broken the resistance here yet lah. There is some selling present here. With, you can see the volume here, the resistance here, right? It is sort of barely at the resistance level, haven't really break through. But on the plus side, you do have good bullish candles and momentum coming up here. You see that there's one bullish candle here, then you have another one here. So the thing is, can this go up, continue to go up on Monday? Definitely can. But the thing is, before it go up, is it going to come down then go back up? Possible also. Is it going to go sideways before it goes up? Possible also. So all these three scenarios are possible. So you have to ensure that your trade strategy, right, is able to account for all these three scenarios. Meaning, whichever of these three happen, you will be able to take profit. Hence, in order for you to sort of be profitable in all three scenarios, right, what you need to do is you cannot prematurely exit. But of course, if the price sort of come back all the way down like this, right? Then you do not want to be in the trade also. Hence, you need to obey your stop loss. So your stop loss need to be at the point where you do not prematurely exit, meaning your stop loss cannot be here because price can definitely come down here sideways a bit and then go up. So if your stop loss is there, right, you are taken out already and then price will continue to go up. So for this case, right, your stop loss need to be at least somewhere around like 0.35 like that, probably around 0.35 level. Because from here, you can see that the support level is somewhere around this region. So you can see the cluster at this region, right? So there's a support there. So your stop loss, right, cannot be right at the cluster there because it can definitely come down and then go back up like this also. So your stop loss need to be lower a bit. So 0.35, I feel that it will be the safest closest stop loss that you can get. But the thing is for 0.035, right? Personally for me, I feel that it is too far from the current price. It is too far from the current price. It is about 35% down, 34% down from the current price. Hence, I don't really like this trade, which is why you do not see me posting this trade. But there will be other people who feel that okay, they don't mind taking this stop loss, so they will choose to enter, which is fine also, as long as you have a trade plan and you follow it. And of course, you can always go with the other method, where instead of entering at the current price, right, you can wait for price to come back down. You wait for price to retrace a bit somewhere here, then you can enter. Then hence your stop loss is not so far off already lah. So the thing is, if you want to wait for price to come back down, right, what you are going to risk is that if Monday price shoot up straight, right, then you might not get your entry ready. So if you are intending to take this trade, right, you do need to work this out. You do need to see, because there is no right or wrong answer here already. If you want to wait for price to retrace, then you risk missing the trade if it goes straight up. But if you want to go in straight at the open price, right, then the stop loss is too far. So there is no win-win position. You need to give up something. And hence, this is the kind of situation where it depends on you as a trader. So you cannot come to me and say which is the best position. I cannot give you that because personally, I won't take this. But perhaps for a lot of other traders, they think that it is a good trade for them. They will take it. And perhaps when price goes up, right, I will miss the profit here. But for other people, they will be able to get the profit. So it really comes down to what you really values lah. Whether you value lower prices, bigger position, or you value not missing out the trade. So because we fix our stop loss here already, right? Then you will be able to take care of your risk properly already. You will be able to calculate how much you are going to lose before you even go in. Hence, this is not like blindly chasing a stock, but rather we are chasing with a proper strategy. We are chasing with a proper risk. You can always chase a counter as long as you have a proper risk, which is why you can see that for Oceanus, right? You can see that for Oceanus, the trade setup, the trade setup actually came here. And if you look at it back like this, right? We are when I post Oceanus, right, I'm actually chasing the trade also. But because I am able to afford my risk at 0.045, hence I chase the trade. So back then the position was the price was somewhere around here. If you look at the stop loss from my entry, right, is about 25%, which is 10% lesser than the Sumco lah. So in a way, right, I feel that okay, I can take this trade, but personally for this Sumco timber, right, the stop loss is too far for my taste. If you feel that it is okay for you, then you can definitely take the trade. So next one, Sri Trang Agro. Of course, this is the glove counter. We see that it have broke through the previous high already. So for those who remembers very long time ago, I have trade entry set up for this somewhere around here, or maybe somewhere even way earlier, but the stop loss was like around I think 90 cents like that, or 95 cents. So if you have been holding until now, right, actually throughout this whole I would say half a year. Yeah, I think it's probably half a year. Throughout these 6 months, right, the price did not hit the stop loss at all, and eventually now it break through the all-time high lah. These are the so-called the extreme scenario lah, where I have a trade and then I don't the price really stuck there for very long. It didn't hit the stop loss, hence, but eventually they managed to go up lah. And in this kind of situation, right? In this kind of situation, there is a reason why the stop loss is chosen there. Stop loss is chosen there because price is not going to reach this place unless it becomes bearish. So as long as price doesn't touch there, right, it is not bearish, it is going to consolidate, does its thing or whatever. So for this scenario, right, the stop loss is working as intended. It is doing what it's supposed to do. It is keeping you in the trade unless the trade become bearish. But as long as the stop loss is not hit, the trade is not bearish. Hence, if you look at similar scenario like US steel, right? A lot of people panic when US steel come down to here because the stop loss is like somewhere here like that. But the thing is, the stop loss is there for a reason because the support is here. If the stop loss is broken, right, then this chart become bearish already. So you should no longer be in the trade. But because the chart is not bearish, right, it is not going to hit the stop loss. It's probably just going to hover around there. So if you trade more and more often, right, you will realize that you will run into a lot of this situation very often. Price will go very close to your stop loss and then hover a bit. Then after that, it start to go back up. So if you keep encountering this situation, right, it is good. It is good because we have chosen the stop loss at the correct place. Let's say if I put the stop loss slightly higher, right? Like for example, for those who are very stingy, those who are very stingy, that kind, like you put, like you see that, oh, support is here, right? Then support is here, but you go and put your stop loss like here. Then what happen is you're gonna get taken out here already. Then after that, who knows in the future, right? Price will continue to go back up and you realize that you are no longer in the trade. But because for our case, right, the stop loss is chosen very strategically. It is somewhere here, right? You realize that there are buying coming in. You can actually see from the volume that there are buying coming in. So there are consolidation here. So as long as this consolidation is happening, right, stop loss is not going to hit unless the consolidation fail and it touched the stop loss and continue to go down. Then in this case, right, you need to respect the stop loss and exit the trade. So it is, so for all my trades, the stop loss are chosen very nicely lah, so that you do not get stopped out before the price start to recover lah. So it doesn't really matter if I am personally in the trade or not. For all the trade, the stop loss is chosen very nicely, and as long as you obey the stop loss, right, most of the time you'll be fine. And the purpose of my this trade data, right, it is to reflect this stop loss very well, because you can see that there's only one trade that is we have hit the stop loss. There's only one trade we hit the stop loss and we exited, which is MMG lah. The rest are either still open or taken profit. But even now, right, if you look at MMG, right, if you look for the case of MMG, right, what you notice is that price actually hit TP, you know, if you all notice. Price actually hit TP2, but before it hit TP2, it taken out my stop loss lah. So for this case, right, my stop loss is not really that optimal. In fact, if I lower it slightly more, right, I could have gotten this TP. But the thing is, of course, I can, in my defense, I can say that I am only human, and in perhaps 1,000 trades, right, or sorry, 1,000 too much lah. Perhaps in 100 trades, right, there will be one or two trades that will encounter something like this lah, which is unfortunate because I am not a perfect trader, and there will be scenario where it will hit my stop loss and continue to go up and hit the TP. It will happen, but the thing is, I make sure that it is kept to a minimum. Meaning, if I take 100 trades, only 1 or 2 times this will happen. So you will encounter a situation like this lah. And of course, unfortunately for me, and I'm also not sure how many of you were in this trade, but we have taken the loss lah. So in this case, right, uh, once it hit the stop loss, do take the loss. Don't try to think that, oh, it will recover and then you continue to hold and then you end up getting a big loss lah. So always try to respect the stop loss. Let's continue on. We have, okay, so Food Empire. Food Empire also is one of the trades that I think when I give this trade on Facebook, right? I remember Patreon was not up yet. I gave a trade setup somewhere here, and then we got stuck for like about 4 or 5 months like that, and after that it just go all the way up. So this is another kind of extreme situation where you don't hit the stop loss, right? You don't exit. So I think for this, right, the stop loss, I think probably here lah. So if you look at the stop loss here to here, right, it's only 22%. From the entry to stop loss is only 22%. So you can see that you do get stuck for quite some time before the money comes in lah. And when the money comes in, right, it is almost double lah. Not really double, but very close to double. About 53%. Yeah, about 53, 54%. Food Empire right now, I think currently it is testing for supply lah. You can see that we are at all-time high, but the volume here is very low. You can see the volume here is very low, mainly because they are selling coming in. No doubt they are selling coming in. So the smart money or the big boys, right? They are just letting the people sell. Okay, like you want to sell, right? You sell. I'm not going to push. Hence, the volume is very low. But once the volume sort of dies down, then price is still maintaining there. It is a signal to the smart money and the big boys that okay, there's no more selling on the retail side already. We can push further up, so we will start to see price going up. So you can see that example very perfectly here. You can see here, price goes up, selling come in, volumes here reduce drastically. Let the retailer sell. All these are retailer selling. Then once the retailer sell finish, right, there's a spike in volume, price shoot all the way up again. So so my guess is that this is probably doing the same thing right now before another spike come up. So as it is right now, I'm not going to enter any trade until I see this resistance being broken and price move up. Then we can take that breakout trade. But for now, right, there's no volume here. Selling is taking place by retailer. You can let the selling take place. Next, Innotech. So Innotech, also very long time ago. I think back in last year, December. It was on Patreon already. So this one, I remember very clearly it was on Patreon because it was my very first few Patreon trade setup that I posted. And I think that was probably around somewhere, I don't know where, like probably somewhere here. And now we hit the TP already. I think we have gone beyond the TP already. So for Innotech also, same reasoning as Food Empire. You can see that there's a sudden decrease in the volume, meaning retailers are selling. So as retailers are selling, right, let them sell. When the price go up and break this resistance, right, then I will look out for a new trade setup. Okay. Then on Hunwell. So Hunwell is it shows up on scanner. It shows up on the scanner. You can always see this kind of chart pattern lah. Price go up, and then it will sideways. So this sideways, right? It can be 1 week, 2 week, or it can be like 2-3 months, or in some case, for the case of Food Empire, like 6 months like that. So that's why, right? If you chase here, right? If you manage to enter here, right? You have to make sure that you can hold through this period. Hence, the rule of never exit unless it hit the stop loss is very important. Because if you impatiently exited here, right, then you are going to miss this portion. So I think Hunwell, right, is a good counter to trade in the coming week. provided that you can handle the stop loss. So let's say you enter at market price, right? Let's say Monday market open around this price lah, 330 lah. So your stop loss should be around this level. You need to avoid this cluster at all costs. So your stop loss should be around 255 like that. So can you handle the stop loss from 350 to 255? Actually 22%, which is perfectly safe. I would say not a very wide stop loss. It is quite a reasonable stop loss that you can take. So you work out how much you are willing to lose here, work out how many lots you can buy, and you can actually take the trade. So if you take this trade, right, let's say price comes back down, right? Price comes back down a bit, consolidate a bit, right? You don't need to be scared because your stop loss is here. As long as it doesn't hit here, right? I think it has a chance to continue go up. So I think this is a very good counter to trade lah. So I might be posting this counter up tomorrow. As long as before Monday lah. Okay, but at least you all will know the reasoning behind this why this counter was taken. And of course, you can see that this was the previous resistance here also that is caused by this. So your stop loss, right, it need to be below this resistance lah. If you put your stop loss here, right, then you might as well don't put stop loss at all because very easily hit and price will continue to go up. Okay, next one, AEM. So AEM is one of the counters that, of course, I'm getting a lot of messages recently, mainly because I entered here. I personally entered here. I think most people should have entered there also, but the most like right after you enter, price just dropped like 3 days in a row lah, or 4 days in a row, depending on when you enter lah. So the thing is, for this, right, stop loss is way over here. And this is like not even halfway to the stop loss. And if this drop is scaring you, right, then you have to ask yourself whether have you traded too much. And throughout the whole AEM scenario, right, even here, right, even when you see here, right, even when price break through this resistance here, right, it actually dropped for 6 days in a row before it continues before it break this previous high here lah. So in a way, it is doing the same thing here. It's going to drop a bit more, then break go up. It's going to drop a bit more, going to break go up. So the thing is, if you are scared of this drop and you prematurely exit, right, then you are going to miss the bigger picture lah, the bigger trend lah. And of course, the bigger trend is also we have broken this. We have broken this resistance here, this previous long-term resistance here, and we have broken there. So right now, as long as price stays above here, right, I think we can see much higher prices now, which is why the stop loss is below this resistance level here. So where you put your stop loss is actually very, very important. And you can see that on this whole entire stretch, right, you can see all the green candles, right? The volume is actually spiking up on the green candles lah, which means that there are buying coming in lah during this entire consolidation period. So I highly doubt price will come back down to 350, but rather it will continue to consolidate a bit and go back up. So AEM, I personally have my position on this counter as well. Next one, UMS. So UMS is not in scanner, but it is something that I just picked up lah, mainly because UMS, right, we are at the all-time high here. We are at the all-time high here, and price is like going sideways, and it does not seem bearish at all. So I feel that there is a chance that it can break out lah. So when price is going sideways, right, you do not want to be buying into this sideways. A lot of people impatient buy into this sideways and then they complain, hey, why am I stuck sideways? You are stuck sideways because you buy into a sideways, which is why you will see most of my trade, I will only buy in after the breakout. So sometimes even after the breakout, it can go sideways lah. But the thing is, the chances of you not getting stuck in sideways is much higher than, let's say, you buy into a sideways movement. So this one I'm keeping close watch also to look out for any kind of breakout trades. And of course, Oceanus go through already, so I won't go through now. And the HST, the Lion OCBC Hong Kong Tech ETF. So there is a hammer candle here, which seems like pretty bullish. And you can see that there is some consolidation happen here before it goes up also. So I doubt that price will come back here lah. But it is, if you want to play this, right, it is safe to put your stop loss at 1.5 around this level. Okay. Maybe price can come back here to consolidate a bit, but I doubt it will go below this sideways zone lah. So what you can do is that you can actually put your stop loss at 1.5. Maybe you can buy a bit here. Price come down some more, you can buy a bit some more, and then most likely it can go back up lah. So a lot of people tell me that, oh, this is engulfing candle, very bearish. So not good to go long or whatever. But the thing is, engulfing candle or bearish candle in an uptrend, right? They hold very little meaning. You will see them like this whole area is also like an engulfing candle here, like that. Price go down, but actually after that price just recover lah. So bearish candle have very little impact on an uptrend. Same thing as bullish candle have very little impact on a downtrend. So it is the trend itself has more power compared to individual candles lah. So always play the trend, not the individual candle. Okay, now let's go a bit into the US side. Of course, you all saw this Palantir. This one, you see the diamond hand is just to make fun a bit lah, but please don't diamond hand. Please stick to the stop loss that I given in my trade setup. Please never ever, whatever you do, right, never diamond hand. Is the first rule. You can diamond hand until stop loss is hit, but once the stop loss hit, right, please exit. Okay, so there are two reasons why I want to post this trade setup. So first, I will, what does diamond hand? Okay, Lin asked what does diamond hand mean. So diamond hand is a lingo that the Wall Street back people are using. I'm sure you all heard of the GameStop saga that recently GameStop went up like 1000% if I'm not wrong. So diamond hand is all those retail trader that that to them, right, it means die also don't want to cut loss. Die also must hold. Even the price don't go until where they die must hold lah. So diamond lah, yeah, hand diamond lah. They can hold the counter lah. So that's what diamond hand means. Yeah, so please don't diamond hand. So okay, firstly, this counter, right, Palantir tag, it is not on the scanner. It is not on my scanner at all. But the reason why I picked this up is actually this is a very mainstream counter. Mainstream counter in the sense that you will see forum, everyone talking about it. If anyone who is trading US stock, right, they will definitely be trading this one. It is one of the very popular counter out there, like Tesla, like that. But so if you notice my trading style, right, I tend to stay away from popular counter because like they tend to be very very, how to say, like no kick like that lah. Like why it's like if you make money from Tesla, but everyone else is making money from Tesla also. So it's like a bit of a personal self challenge that I do by myself lah. That I don't like to trade very famous counter. But for this, right, I'm willing to sort of forgo my own rules a bit, mainly because you can see that there is a very large consolidation zone here. Support if you want to call it lah. And you can see that right at the support, right at this support, the volume here is very high. Sorry, you can see that the volume at the support here is very high. And when it hit the support back again recently, right, there is a sudden spike in the volume, meaning, right, there's a lot of buyer coming in here. In order for this kind of volume to take place here, right, there has to be some big buying, some big institutional buying that is happening here. So there were two justification for this entry, and mainly because price is at the support and there is some very obvious buying that is being seen. So so the stop loss is somewhere here, right? And if you buy here, right, you are quite near the stop loss lah. Hence, you'll be able to get quite a number of counter. And I do believe that this is one of the counter that can become like Tesla like that lah, where it can suddenly go up to like $50, $100. But of course, like I mentioned, don't go and diamond hand. Just you can enter the trade setup that I gave you. Stick to your stop loss at all costs. And let's say when price hit the TP, right? When price hit the TP, right? Instead of taking profit, right? What you can do is you can shift your stop loss. You can shift your stop loss to break even. You can shift your stop loss to lock profit so that you are still in the trade and you can continue riding the trade. So I think this one does have a lot of potential, but make sure that you are able to hold. And I think there will be a lot of volatility incoming also. So make sure you are not get too much affected by the volatility. Just stick to your stop loss, and if the price hit your TP, slowly shift your stop loss to break even or lock some profit. Next, US Steel. US Steel I've gone through already. So the main thing I want to go through about US Steel is to say that the stop loss is here for a reason, and the reason why when price start to get very close to the stop loss, it start to U-turn because the stop loss is working as intended. So don't be too scared lah. Just stick to your trade plan already. And of course, next one is PayPal. PayPal is one of the counter that I think that is quite close to TP. TP is at 320 if I'm not wrong. So we are very close to TP, but start to come back down. But I think the entry was somewhere around here. So you are sort of still in the money, so don't really need to panic a bit. And you can see that the PayPal trend is actually very strong, and this little retrace here is almost like non-existent. Even if it retrace all the way here, right, I might still hold it as long as it doesn't hit the stop loss. I think I'm not sure where I put the stop loss really. So yeah, so as long as it doesn't hit the stop loss, right, I think this is still a very strong trend that you can ride. Okay, so let's go on to Hong Kong counter. We are close to 10:30 already. So Hong Kong counter Razer 1337. So previously Razer, right, we hit TP2 already, somewhere here. So for those who are still remember this trade, I think sometimes back quite a while back already lah. And what caught my attention was, so Razer did not show up on scanner here also, but I was just looking around, and what caught my attention was this hammer candle lah. And we are at the resistance here, and there seems to be a hammer candle coming out. So I do believe that maybe it will not shoot up straight, but there are buying support coming in. Maybe it might go sideways a bit, and once I see there's a good chance for the price to spike up, right, I will definitely put up a trade setup also. So this is definitely in my watch list also. So do watch a close eye on Razer also lah. And overall, I believe that the Hong Kong tech sector, right, there is a lot of room to run, unlike US tech sector. US tech seems like very overbought right now, but Hong Kong tech sector is still there's still a lot of opportunity there lah. And hence, if you don't know really what to buy for Hong Kong tech, right, you can simply just buy this lah. Lion OCBC, the Hong Kong tech ETF. This one is listed on XGX, so you can actually buy during Singapore trading hours. Okay, next one. Chow Tai Fook. Okay, this one very I don't have confidence in pronouncing this company name lah. But I just posted this setup today also, mainly because you can see that price spike up very nice, and it is sort of going into like the not all-time high lah, but about the previous high was back in 2018 like that, and you can see that it does so after a long consolidation. So and if you look at it on a medium trend, right, it is a very good uptrend, and it has quite a long consolidation, and after that price spike up, so there is a good good chance for it to shoot up even higher lah. Hence my trade setup lah. So if you are looking for Hong Kong stuff to trade, right, I think this is one of a good potential that you can go in. And lastly, NWS holding. So NWS holding is also a Hong Kong counter that I posted, I think last week lah. I'm not sure which day. But unlike most counters, right, you will see that this is actually a downtrend. It has been downtrend for quite some time lah. But what you will notice is something very obvious. Very obvious is this volume here. This volume spike here, very obvious. And you can see that this volume spike, it happens around here, somewhere around here. And when you see this kind of spike happening at the bottom of the trend, right? And some more, if I'm not wrong, let me change this to weekly. If I'm not wrong, yes, if I'm not wrong, the previous bottom was somewhere close by here. Okay, so now that we have reached here, right, you can see that there was a sudden spike in the volume. Then after that, price start to go up already. You can see the first, I would say a higher low and the second higher low here. And you can see that price is breaking through this resistance already. So a lot of people like to call this what, the cup and handle lah, or triple bottom lah, what, call it whatever you want lah. But the main driver for this trade is, sorry, I'm very lag. The main driver for this trade is that it is quite near the previous low. Not only that, there is a huge sort of, I would say, stopping volume that happening here, which sort of you can safely say that this could be a very strong potential bottom line. And after that, price is starting to go back up lah. So hence, this is one of the very few counter trend trade that I will usually take. And of course, in order to take counter trend trade, right, I do have quite a few rules. Mainly, number one is that I must be able to see a stopping volume, and I must be able to see a higher low before I go in, and it must be able to break the latest resistance here lah. So it is currently met all of my criteria. So the thing is, when I bottom pick, right, I'm not going to buy here. I'm not going to even buy here, but maybe once I see that there's a higher low already, I will go. I will be more safer to go in now. So if you go and anyhow buy here, right, who knows, it can continue to fall, can continue to fall further lah, which is what happened to most people who chase Sembcorp Marine lah. They try to pick the bottom and the thing just go lower and lower. Just to reiterate, let me just bring up Sembcorp Marine chart again. So those who try to bottom pick here, right, without waiting for a higher low, right, they probably lost a lot of money lah. So it is always important that when you are bottom picking, wait for the higher low first. Wait for it to turn a bit first. Because for example, if I enter here, right, compared to I enter here, right, I'm only losing this much. And what for you want to chase this with a lot of risk? I would rather enter slightly higher and then take that trade, which is much more safer, rather than I buy here and then you end up selling there. Okay, so that's basically that's it for today. So going forward, right, there is a lot of potential trade setup coming in lah. So try to look out for it. If you are not stuck in open position from before Chinese New Year, right? Then try to take a look at all the trades that all these setup that I have mentioned. I believe that they do have good potential, and I do feel that even in the last week of February, this coming week, right, market might still be flat, but hopefully in from March onwards, right, we will start to see the market start to pick up lah. So okay, so that's all for today, and have a good trading weeks in the coming week lah. Thanks everyone.